Dennis Kelleher is the co-founder and president and CEO of Better Markets. And Better Markets is holding a special event tomorrow down in Washington, D.C. to talk, I guess, just about how far we've come over those 15 years, Dennis. And I guess the big question is, have we come far enough?
Well, thanks, Romaine. Nice to be with you. Yes, we're holding a conference tomorrow. It's virtual, and everybody can join it. And we've got some big headliners, Senator Elizabeth Warren, SEC Chairman Gary Gensler, CFPB Director Rohit Chopra, and anybody can listen in. Just go to our website, www.bettermarkets.org, and sign up, and you can join us. And we've got another dozen or so experts to talk about not only what happened 15 years ago, but where we are today, what happened in the meantime, including just 6 months ago when we had a banking crisis where the second, third, and fourth largest bank failures in history happened 6 months ago. So there have been some important lessons learned. There have been some important rules, regulations on the banks and the non-banks. But the real question is, are we safe enough? And is too big to fail still too big and too alive?
Well, that's what I'm curious about here. I mean, there was no debate at the time that there was material systemic risk here, from whether it was what first happened with Bear Stearns earlier in the year, and then, of course, later with Merrill and Lehman on the same week, to be sure here. I'm not so sure you can say the same thing about the systemic risk out of the regional banking crisis, or is that misleading?
Well, given that the recent regional banking crisis is going to cost taxpayers more than $30 billion for the bailouts, keeping in mind they were bailed out because they needed capital. They were undercapitalized. That's also what happened in '08. Merrill Lynch, Lehman Brothers, Goldman Sachs, all the big money center banks and many non-banks didn't have enough capital to cover their own losses. They also didn't have enough liquidity, and they didn't have resolution plans so that they could go into bankruptcy like every other company in America that fails. And so there have been a lot of rules put in place, but we find out 6 months ago that many of those rules weren't applicable to banks of the size of 100 billion in assets or so, or a little bit more, and yet they caused a systemic event, contagion, because we saw depositors fleeing, and we saw other banks ending up on the precipice of failure that required the bailouts. And so by definition, they were systemically significant, and there's still too many systemically significant banks and non-banks that don't have enough capital. Remember, the country has never suffered from a crisis because of overcapitalized banks. It's undercapitalized banks that are a threat to this country.
And those are just banks. What about private equity and the shadow banking system that's out there? We know regulators such as the SEC's Gary Gensler has been looking into trying to rein them in and get some kind of handle over them. But that's kind of a looming threat out there in terms of whether you're seeing a lot at stake that's not fully accounted for, not even fully understood.
Well, you're absolutely right, Scarlet. There's a major problem with the under-regulation of the shadow banking system, the non-banks. They're both not transparent and they're not regulated. And Bill Dudley, your guest earlier, made a good point there, and frankly, Jamie Dimon's made a good point, that non-bank system doesn't have enough regulation or transparency. There's too much systemic risk there that we don't even know about. That's what happened with AIG and a bunch of other non-banks back in 2008 that surprised everybody. Because it wasn't regulated. But what has to be done is not what the banks want. They're saying, don't regulate us because the non-banks aren't regulated. The fact is, banks need to be regulated a little bit more, and non-banks need to be regulated a lot. And the Financial Stability Oversight Council needs to get back in the business of regulating non-banks. And you're also right, Scarlet, that the SEC has a role to play here, as does the CFPB, both of whom are going to be speaking at our conference tomorrow and addressing too big to fail and these systemic threats from a market regulator's point of view and from a consumer financial protection point of view.
So, Dennis, what's interesting, of course, is when we talk about too big to fail, that was once a bad thing. It's become a better thing, I suppose, is the way to put it, especially in the wake of what we saw in March. Suddenly, too big to fail looked like the safest place to be. If you're going to take your money out of Silicon Valley Bank and move it to Chase, you felt pretty good.
Well, you're right, but it's perverse incentives, right? I mean, too big to fail is never a good thing, because what too big to fail really means is that the biggest banks in the country that pose the biggest threat to the financial system don't have to worry about failing, because if their recklessness or illegal conduct or just bad business decisions leads them to failure, unlike every other company in America, they won't go to bankruptcy. They'll get bailed out by taxpayers. That's wrong, and that's why too big to fail has has to be reined in. That's why we need more capital liquidity on the biggest banks, no matter what Wall Street says.
Right.
And that's why we need more regulation of the non-banks, and we need it fast.
All right, well, we'll see how Washington stands up to the lobbyists. Dennis, really appreciate your joining us. Dennis Kelleher of Better Markets.
I'm glad he brought up AIG. I forgot about that. I mean, that was just September of 08.
Yes.
I mean, you had AIG getting the bailout.
Yeah.
Of course, you had the collapse of Merrill, or basically the sale of Merrill.
The forced sale.
Collapse of Lehman, and then, of course, you had Bear Stearns earlier that year.
Yeah, and then there was the AIG
absolutely
bonuses.
astonishing.
Remember that?
Yeah, it was like 160 something.
Yeah, that caused a lot of uproar. All right.